All right, welcome to OK Computer. I'm Dan Nathan. I'm joined, as always, by Deirdre Bosa. She is this host of CNBC's Tech Check. Debo, welcome.
It's been a busy news week, so I'm excited to be here.
I mean, the fact that you made time for me and our audience on a week where I've seen you all day long on CNBC reporting on all the tech earnings, and we're not even gotten to the big kahuna, that would be Apple, and of course, Amazon, which you track very closely. Those are going to happen Thursday after the close. And we're going to hit all those. And also, I have a great discussion with Deepwater Asset Management's Gene Munster, where we do a little preview of those. So stick around for that. But Dee, first things first, let's do a little housekeeping here. Okay. As we were kind of looking around and seeing what Dee was kind of reporting on this week and some things we wanted to hit, we saw a video on CNBC.com, which has also been running on the air. Deirdre Bosa, ambition to me is the American dream. This was really great. And talk to me a little bit about this, because I know your background, but let's let our listeners hear a little bit about how you started, because you did not start in the media, but you've actually been a reporter, obviously, since a pivot earlier in your career. You've been in Shanghai, you've been in Singapore, you've reported from Canada, and obviously now you're in San Francisco. Give us a little bit about the origins of this video and this means to you. What about the American dream is so important here?
I would love to, and I love that you saw that, Dan. And I will also say that this is one of my favorite parts of the week, is getting to sit down and talk about you and take sort of a broader perspective. So I love doing this podcast. So CNBC is running these sort of promo videos on ambition. That's sort of, if you watch CNBC, whether you're a CEO, a CFO, a retail day trader, a student who's looking to learn more about financial markets and companies and the economy, it's all about ambition, right? Wanting to do more. And so they've asked a number of us on air people and even guests, what does it mean to you to be ambitious? And I sort of went back to why I even entered this industry in the first place. And as you said, Dan, I became a journalist after I was already in the corporate world. I was working for Rio Tinto, believe it or not. I was in the mining industry in Shanghai, China, where they were paying me basically pennies, no expat package by any means. But we called ourselves RMB millionaires because you would feel like a millionaire if you were living in China with a much lower cost of living, even if you were earning nothing by, US or Western standards. So I was in Shanghai, and a few of my colleagues were actually arrested for espionage charges. And I saw journalists from the Wall Street Journal, from the Financial Times, et cetera, camping out in our lobby. And I looked at them and I thought, I think it looks a lot more exciting to be on that side of the door than on this side of the door, punching numbers into a spreadsheet day after day. And that's really where it began. I was always interested in financial news. I always wanted to work for CNBC. And I don't know if you know this, Dan, but I interviewed a few times. I did not get the job right away. I had to be ambitious. I had to go back and say, I can do this. I can get up to speed. I had to go away and study for a long time because, as you know, well, Dan, there's no teleprompter at CNBC, or very minimal. You got to think on your feet. You got to be quick. You got to digest the news and react to it. Speaking of which, been a lot to react to this week.
No doubt about it. We're going to put that video in the show notes. It's a great video, and you are so articulate, and your story is pretty fascinating. And hopefully, over the next, let's call it, few months or whatever, our listeners get to hear more about your background, because it's pretty fascinating. I will tell you this: that I am in absolute awe of the work that people like you do. Melissa Lee, who I obviously have worked, really closely with on Fast Money for so many years.
One of the best.
The ability for you guys to kind of think on your feet, ask critical questions, ask the right questions, and get to the main point for the viewer or the listener is just so important. And for me, it's just a very different. I'm a market participant, right? So I'm just like a hot take machine. You guys have to be very thoughtful about a lot of this and how it's kind of relayed, I think, to the viewer, which is expected to kind of not be staring at a FactSet machine all day long the way I do, right?
Well, okay, not to make this too much of a love fest, but I think that about you because you have to actually make calls. We don't do that at all, and we're not invested. We're not allowed to, but you actually have money in the market. So it all works together, right? You need someone with some skin in the game. You need someone to step back from it too, but let's just say that appreciation is mutual.
All right, fair enough. Let's talk about the markets here today, because I think it is a pretty fascinating day. We're getting towards the end of Q2 earnings season, and I think that obviously we said, Apple and Amazon are going to be really important tomorrow night, and they're two very obviously different companies with very different exposures, but to combine, they're about $4.5 trillion in market cap. So what they have to say about consumer, about enterprise, about China, these are going to be really, really important. And I'm just curious, like, you've been looking at the kind of progression of our earnings season. It started out with the banks on July 14th. They were better than expected, but it was also a group that had been, fairly depressed. And I think, feeling the after effects of the rate hikes and the regional banking crisis and that sort of thing. But tech earnings, for the most part, D, have really been better than expected. And it's kept the market kind of buoyed over the last few weeks. But today we have a NASDAQ that's down 2.5% right now. We're just before 1 o'clock taping here. And, to me, in front of tomorrow's earnings, I think like, this is a really important moment for the markets because it's been really hard to find reasons why we might have a sell-off here. So I'm just curious how you're thinking about it. What's the sentiment? At least because you've talked to a lot of CEOs, you've talked to a lot of investors, you've talked to a lot of private market investors over the last few weeks. What do you think the feel is for the markets right here?
I think when we went into this earnings season, and actually for the last couple of earnings seasons, there were such high expectations. And the mega cap tech companies have basically had to just do enough to keep the rally going. It's been so hard, as you said, to knock off tech, even though there's perhaps been reasons for it. We thought maybe this earnings season that the generative AI hype cycle would need to have more muster behind it, right? Like Nvidia showed investors that they're actually monetizing this shift right now. We thought that maybe Microsoft and Google and Facebook or Meta would have to do the same. They didn't really. And investors said, okay, that's fine because the promise is still there and we're willing to give you a little bit more time. So I think the same goes for Amazon and Apple tonight. I mean, you look at a company like Apple, which has been seeing declining revenue growth over the last few quarters, and investors have said, okay, because the balance sheets are such fortresses, because they have these wide moats, because they're seen as the most exciting companies, that just feels like it's good enough for tech to continue to carry these markets, although the rally has broadened out over the last month or so, which is probably encouraging if you're along and you're looking and you want to invest, you want to see strength from more than just the mega caps.
Yeah, well, and I think it's important to note that broadening out, you've seen a rotation, right? So, like, these were really crowded trades, right? The Microsoft and the Nvidia and Tesla and some of these things that have benefited over these narratives over the last few months or so. And it's interesting to note that the Nasdaq is down, let's call it 3.5% from those recent 52-week highs, but stocks like Microsoft. This is a $2.5 trillion market cap company, is down 10%. Tesla, which was nearing $1 trillion, is down 15%. Netflix is down more than 15%, much smaller company, but again, had a huge run into its earnings, right? And then sold off after that. So I think it's interesting that, what's clear is that investors are heading for the door, at least today, in a lot of the most crowded, much loved trades. And I'm just going to mention Nvidia down 6%. I mean, this is $1 trillion market cap company that has doubled since it reported earnings last quarter. They don't report again until August 23rd. And might the impetus, and again, last night AMD reported, right? And this is exactly the point that you just made here, is that investors want to see how much of the excitement was in AMD, and they weren't able to do it. Now, the stock was up a few percent. It actually opened up on the day, and now it's down 8%. All that's saying is that a lot of investors are heading for the door at the same time.
Oh, something that I've been tracking this earnings season. I mean, it's easy to look at how many mentions of AI there are, but at the, on the earnings call. But what I find is more interesting, or have found to be more interesting to look at, is mentions of CapEx between Google or Alphabet, Meta, and Microsoft. 39 mentions. So not only is AI not being monetized at the moment, it's actually costing them a lot of money, because in all three of those cases, they companies warned that their capital investment costs are going to go higher as they invest in this opportunity. That means different cloud infrastructure. Essentially, it means more chips from Nvidia. That is interesting that it's down 6% today. That is a huge move for such a big company. But my takeaway from at least last week was that Nvidia is going to be the big beneficiary. Is that already baked in, though? Like you kind of pointed to, it has run up so much this year. So do we get a bit of cold water?
Yeah, that is going to be the absolute main event. And I also think it's interesting to note that, like, this week, Intel, which was obviously not really involved in this, and we know where their exposures are, PC and data center, and some of that has been weak, and they've been kind of late to the game. They did talk up a little bit about the opportunities that they see, let's say, in the back half of the year into next year, but that stock gapped up 6% Friday after its earnings, and it's given it all back. It's filled in that gap. And so I think, I know this sounds kind of kitschy here, but mind these gaps. And SoFi was another one. I want to talk a little bit about some of the fintech names. That stock was up 20% the day after it reported earnings on a perceived better than expected quarter, and raised. And now in the next last two trading days, it's given all of that back. So this week we're going to have Block, we're going to have PayPal, we're going to have Coinbase. So like I think it's really important to kind of watch the behavior after expectations high. Stocks have had big runs. They put up the quarter in the guidance, and maybe you have that one day move. But like with AMD here, it doesn't take too many folks at the same time saying, is this as good as it gets, right? To head for the door and have the opposite reaction.
One more name for you to contemplate that saw a big reversal in just a matter of, I think, an hour or so was Uber yesterday, pre market. Better profitability than expected. They were up and then lost all of those gains and throughout the day. So that's another one that I was all day. I was trying to figure out why. Maybe it was some profit taking, but what does that say about the market as well? That's a stock that has run up 100% year to date.
All right. So I saw you on CNBC yesterday talking about this. And, it's interesting. This is a company I know that you know really well. And I want to talk a little bit about the advertising business there because it's something that, I use Uber an awful lot, and I've tried to use Lyft here and there. And just in New York City, it's just one of those things is I think availability of drivers and speed of, to you and all that sort of stuff. I mean, they just got it down. And I'm also kind of, it's becoming a little bit, and Josh Brown, the halftime report, the reform broker, he had a great post on his blog yesterday talking about Uber, and we'll put that in the show notes. And he was actually talking about it in the context of Elon Musk wants to build a super app, but Uber is way far ahead of their ambitions. I just thought it was really interesting. I'm not saying it's going to look like the super app that Elon Musk envisions, like a WeChat. But when you think about how many users and you think about the trust that you already have with them for your safety, for your financial, all that sort of stuff, I thought it was an interesting thought exercise. But the one point I wanted to make about this advertising business is that this could be really powerful. You've tracked it with Amazon as it's become, a 30 plus $billion high margin business. I opened Uber the other day and I saw a reminder that the show that I love now on Apple TV Plus, Hijack, I don't know if you've seen this with Idris Elba, it was like, hey, new episode this, tonight or something like that. That is a powerful relationship that you have in your phone like that if you're using it multiple times a day the way I am. So talk to me a little bit about that business.
That is an interesting idea. And I think that, Dara Khosrowshahi had ambitions to be a super app years ago, and he tried to have a fintech offering, which didn't really work. They do have food and delivery. So I guess I can understand that point as far as any American tech company is able to achieve super app status. I'm skeptical that anyone is even close to it in the way that it really exists in Asia. Uber and advertising is interesting. You're right. It kind of took everyone surprised at Amazon that it became this massive business. It's high margin, it's high growth if you're getting into it. You have a compelling platform. I worried at the beginning that it would be a little bit too intrusive, right? You hear about advertising being pushed to you to your phone when you didn't even open up the app. So it's interesting to hear that you think it's compelling and that it's useful. Um, However, I th we'll see. Did you see as well yesterday, just the pure price of ride sharing and food delivery? Did you see that in a Wired interview, Dara Khosrowshahi was asked to guess how much an Uber cost to get there? He said 20 bucks. It ended up being more than twice that. And that, I guess, is you can say that it's inflation, but there's studies out there that have looked at the price of ride sharing and it has, you know, gone up so much faster than really anything else.
Yeah, I think it's
Many
interesting.
other things.
So I use the subway as much as I can in New York City. It is easily the best way to get around in a fast place. But a lot of folks are just not happy about what they perceive to be the safety, underground and that sort of thing. And so you've also seen with the rise of rideshare that the amount of taxis or the availability has gotten kind of poorer. So as we get to a point where we're looking to the predictable tech solutions, I mean, Uber has definitely gained that trust. And when you think about that delivery business that they had, I mean, they gained a lot of trust of a lot of Americans, during the pandemic or so. So, I think that, Dara, who came in and, was meant to fix something that looked kind of very wide reaching as far as their ambitions in a way, has really focused on a couple of things that they want to do really well. And I know that you've been really critical a lot of these, and I don't mean critical, you've actually highlighted the fact that a lot of these companies were doing it right at the shareholders' behest, right? They like, as far as profitability was concerned, he guided towards gap profitability. They're getting there, right? So like he's kind of done the things that he said he's going to do. From an investor standpoint, I think that's good, and from a consumer standpoint, I feel like yes, the costs have gone up for a lot of these deliveries and the fees that are embedded and that sort of thing, but the service has not suffered.
Yeah, and I think that Dara Khosrowshahi has done a really fantastic job communicating with Wall Street. I think that he was early to realize that you can't just rely on adjusted EBITDA, which was one of my big complaints, is that I think that maybe the average investor, when you say you're profitable and you don't specify whether that's adjusted EBITDA or GAAP profitability, I think that that can sometimes be misleading to some of the average investors. But to his credit, $1 billion in free cash flow. That's pretty amazing for a company that, even not long ago was losing billions and billions of dollars. And I mean, the thing that I take issue with is I wonder the business model. I don't know that it's still disruptive, and it's going to change everything, or it's going to be the Amazon of transportation, as it was claimed during its IPO, or whether it's just this kind of interesting utility, right, that has replaced the taxi industry. Even when we talk about its profitability, and the headline from yesterday was first quarter of operating profit. It's a little cloudy because they have so many other investments in other companies. So they're not totally in control of that profitability fate. They're subject to Aurora and Grab and Didi and Lime, a scooter company that is still private. So those are all marked to market or marked in some way each quarter. So if you are a bull and you're looking for Uber to enter the S&P 500 next year, not so fast. They got to show 4 quarters of this, and that's not necessarily in Dara's hands, even though he's a great operator. Has to do with some of these other companies and its investment.
Yeah, and that's a really great point. Tesla, when it was added to the S&P 500 in late 2020, I mean, that stock, was a rocket ship. From the moment it was announced, I think it was like November of 2020, the stock was, like kind of floundering a little bit, or was basing, and they put up those 4 consecutive quarters of gap profitability. And that was it. And once you get into one of those indexes, I mean, like it's a good place to be, and for a company that was just nearing $100 billion market cap, I'm sure that's going to be on a lot of investors' kind of radars here. But again, that's not the reason to buy a stock. I do think though that it adds to it immediately will go into dozens and dozens of funds that track the S&P 500. I caught you last week. I was kind of taking a look into a story that I had heard and that you've been working on about the demand for office space in San Francisco. We know that, a lot of the narrative over the last kind of couple of years has been that, this is one city center that has not come back the way like a city like New York has. And you were on the NBC Nightly News, you were doing a report on just what this AI bubble might mean for demand for commercial real estate in San Francisco. So my question to you is, what did you learn about this? And, I mean, I think, my view is that, I think what's gone on in the stock market as it relates to AI probably doesn't map exactly to like how we're going to see this kind of play out. So I'm just curious, is like, what did you learn from that reporting here? And is it really something that a lot of these folks are really focused on the Bay Area here, or is it going to be a bit more dispersed than some of these other secular shifts that we've seen that have been perceived to be out of Silicon Valley over the last, call it 10 to 15 years?
So the reason I started looking into this story is I went to a wedding in Vancouver, Canada, and I had so many people in the property business as well come up to me and say, "Oh, are you okay? What is happening in San Francisco? What a mess that city is." And I thought, it's interesting. I know I've heard this narrative, I've seen it a lot, but living in the city, it really does not feel that way. Which is to say, both things can be true. You're going to walk through the Tenderloin, even Union Square. It's not going to be great. These are, the center of the city where you see open air drug market, homelessness problem. My kids know that when we get out of the car to go to hockey practice in downtown, they got to hide the Nintendo Switch in the trunk underneath. Otherwise, our windows will be smashed. Our car will be broken into. This is just something that they have grown up knowing. So the question is it all that much worse right now than it ever has been. I would say it's always not great in San Francisco, and we've gotten a really bad rap. Yes, some of that is um is fair. But I went to look at the AI excitement and who's building here, and it turns out that a lot of companies and really interesting people in artificial intelligence, especially generative AI. They're building in San Francisco. They want to be here. I went to one company, Scale AI. It was last valued at $8 billion. So it's a big company, and this guy's been around forever. Went there on a Thursday afternoon to film the story, and the office was full. And they had, I want to say it was like more than 10,000 square feet right in the middle of the city. And you go to a place like Hayes Valley, which is just across town, still considered sort of downtown San Francisco, and it is buzzing. The cafes are full of people working on things. There's these kind of like AI communal living places where people are networking. So I think both things are true. I also talk to a lot of people in the business community with established businesses, particularly in fintech, that are unhappy with the city's policies and they want to see more from Mayor London Breed. And I sat down with her as well to try and question her on what she's doing. And it's tough. So the city has a lot to come back, but there's also this glimmer of hope in AI. And I will say that a lot of it's happening here. And the numbers back that up as well. You've got, I think, 20 of the best funded AI companies. They're all here in the Bay Area, and a lot of them are in San Francisco proper.
Yeah, no, I think that, that could be a silver lining of just the demand in the near term, for these kind of products, services, or innovation in around it. We know that it's just this kind of, the network effects that have always existed in Silicon Valley as it relates to access to talent and capital and all of it being in one place there. Hopefully that is something that kind of can benefit and really speed up. All right, well, listen, Deirdre, this is a big week. We have some big fintechs. We have Apple. We have Amazon. Those are Thursday after the close. You and I will definitely check back next week. You can find Deirdre on CNBC on her tech check, and she will be reporting on all of this. So I really appreciate you being with me this afternoon.
Thank you, Dan.